Hi, everyone. Welcome to the show. You're listening to the I Am Real Estate Show with the Johnson Smith team at Indie Realty. And we're here with our great sponsor, John Spur with Inspired Life Mortgage. How you doing, John?
I'm good. And yourself?
I'm doing great. And how you doing, Sandra?
Hey, I'm fantastic. Hoping it gets better, but I'm fantastic for now.
I wanted to start the show with this, is that this is out the new year. So my question to you guys is that when is it okay to stop wishing everybody a happy new year?
Oh, geez.
I wasn't expecting that.
Groundhog Day? I mean,
I don't know.
I don't know.
I always thought it was maybe after the second week of January, I shouldn't have to say Happy New Year to anybody else. I'm pretty much done with it. New Year's gone.
Well, I'm so confused. I'm still saying Merry Christmas. So.
Like, can we just all agree the Christmas lights can come down now?
Yes.
Agreed.
All right. We'll settle on that.
That's unanimous. No more Christmas lights.
But someone has some pretty ones up. I'm like, oh, if you can keep them up all year, I'd be really impressed. But I'm sure someone's going to say something.
Well, I can. I don't have an HOA. I do whatever I want.
Sorry, everybody. We just wanted to, that was a question. I've just been thinking all day about that because I met someone and I didn't know whether to say Happy New Year to them or just go on and start saying, how you doing, and go talking about business. So I was confused for like 30 seconds. So I'm making everybody else confused. Thank you. You're all welcome. Huzzah.
Welcome to my life.
Hi, everybody. We're here with John Spur. We want to talk a little bit about the lending industry and what's going on, some of the trends. Remember, we're starting 2023. And how do you think 2023 is starting, and what do you think is going to be happening in the first quarter?
Well, I have already seen an uptick in people getting pre-qualified. The numbers came out last week from I think it's FHFA that puts them out, but basically they've seen an uptick in people getting pre-qualified and people pulling credit reports for new home purchases. So that's a very good sign because there just haven't been a lot of new applicants out there in the last 2 or 3 weeks. And so I think that's a great sign just for the real estate market in itself that we're already seeing people expressing interest in buying a home. Rates have been, I would say, good. I'm happy with what they're doing. They're continuing a downward trend. I think October was the peak, and we're just going to continue to see them drop. Every so often we'll have a little spike here and there. CPI came out today, and it was just flat. There wasn't really anything special about it, and the bond market just pushed right on through, and we saw a little improvement in rates today also.
That's really good news. And the thing we're hearing is that people are afraid to come into the market because of the rate and because of these other reasons. And we're trying to find a way to remind them that you should never be afraid. You should always have someone to talk to your lender or talk to your agent to give you the idea what the market is and what you can do when you get in there, and don't be afraid to come in.
I've been telling a lot of people that said they think it's a bad time to buy because of interest rates or because of the home prices and home values possibly going up or going down.
Yeah.
And I keep telling them you need to invest in yourself. If you're renting, you're investing in somebody else. You're not investing in yourself. If you have the money for the down payment and you have a stable job and you have decent credit, it's always a good time to buy.
Okay.
Stop investing in somebody else. If you rent, your rate is 100%. We say that all the time.
Yep, your interest rate's 100%. And then the other thing is, if you look at signing a lease for a year, calculate what you're spending in that year. Probably over $12,000. We could say pretty easily $12,000 to $24,000, and that money is gone, and you've got nothing for it. Where if you had invested in yourself, you would have some equity in your home.
Absolutely. Not to mention, or let's not forget that home value is going to continue to go up. So that's equity that you're going to get over time. I mean, just a general trend in real estate over long periods of time is values go up. We do see dips, but values go up. But I just, if you can invest in yourself today, that's going to just compound 5%, 10%, 20%, 100%. I mean, my parents bought their house in 1972 for $23,000, I believe is what they paid for it. And they don't live in it anymore. They haven't for a very long time, but I know it just sold for over $375,000. You know, so there's just invest in yourself. Stop investing in somebody else and stop renting.
Yeah, there was a point. I purchased my home in 2004, and there was a point that the housing prices really came back down to what I paid in 2004. But because over that, decade or plus of time, I was paying myself my equity actually was fantastic, even though the price had dropped back down. And then, of course, the market comes back up, and now, the equity is even better yet, due to the combination of the fact that I'm paying myself and that the pricing is back up again. So,
and isn't another good thing that I think you brought this up a couple months ago, is that your mortgage price is going to be the same. That every year you rent, it's always going to go up. But that mortgage thing stays where you can be stable and know what you're going to pay every month, and you can keep your bills together.
No, exactly. You do a 30-year fixed, and your interest rate is fixed. So your principal and interest payment is never going to change. Your taxes and insurance can fluctuate a little bit, go up and down, but you're not going to have a 10%, 15%, or 20% rent increase like you would if you kept renting.
Right.
Or even worse than that, and we've seen it happen, is a lot of these landlords are at a point where, hey, I'm selling this house. The values are up. I'm not going to re-rent it to you. I'm selling it. And it's already hard to find a place to rent or a home to buy, and all of a sudden you're being told that your lease isn't getting renewed in a house you've been in for 5 or 6 years. I've seen that a lot lately.
Where you need your first and last month down payment, monthly payment. You're going to have that, and you got to have your monthly payment for your rent, and then you don't know what your electric bills are going to be. You have nothing, and if there's anything out there nowadays.
Yeah. I mean, you got to think about school districts and, driving to work or to places that you frequent. Yeah, and you kind of lose control of that.
Oh, the other thing I've heard frequently is, I'm priced out of the market, or I can't find a home I can afford. And we're actually working with a couple now, and it's really, there's homes out there for every segment and for every wage earner and how much, what you can afford. You just have to hunt for them and look for them. But I don't feel like everybody's been priced out of a home. There are opportunities and there are options out there. We just have to work together as a team and help find that for you.
Understanding options, that sometimes options are not going to be that if you're making $25,000 a year, you're not going to be able to afford a $400,000 house, even though that's what you're looking for. Maybe obviously, reality has to sit in somewhere.
Yeah, no, we have to. You have to have the right expectations, and looking at homes that are going to be in the price range that you can afford.
Yeah.
But again, would you rather pay an apartment complex $1,000 a month for your, 2-bedroom, 1-bathroom apartment? Or would you rather go make your own mortgage payment of $1,000 a month for a 2-bedroom, 2-bathroom condo that is yours, that you can do what you want with?
Right. And then, too, you've talked before about with interest rates, you marry the house and you date the rate. So there's always a chance that you can come back in and refinance that and see a savings there. But also a lot of people are just building equity, and then they are going to move on to buy that dream home.
Absolutely. And there's always going to be an opportunity to refinance. And the one thing we know about mortgage rates is every time they've come down in the last 30 years, they've always gone to a new historic low. So eventually we will see a very low rate again.
I think I was 19 when I was one of 2 people on the title of the first house. And so... Well, we're going to ready to break, so we'll pick up with that thought when we come back.
Yeah, we're here with the owner of Inspired Life Mortgage. That's John Spur. We'll catch you on the other side, and we're going to talk a little bit more about lending with a great lender and sponsor. Hi, everyone. We're back with John Spur, the owner of Inspired Life Mortgage, talking a little bit about lending and what is going on with the future of the lending process, and as we move forward into 2023. You see any good news, bad news? What are you looking at?
Oh, we get both. There's good news in the sense that we are seeing some leniency coming out of the automated underwriting when it goes to purchase transactions. We're getting a little bit more transactions approved. We started seeing appraisal waivers again, which is great.
Great.
On the refinance side, they're tightening up investment properties. They're making it more and more difficult for people to purchase investment properties because they feel like they want that housing market available for first-time home buyers because there's a housing shortage. So it's getting more difficult to buy a second home or an investment property.
It is getting more difficult.
Yeah.
Okay.
Larger down payments, higher interest rates, they're just making it less attractive.
Is that because they want more single home family for other people instead of someone having 2 homes? They want you trying to make it equitable?
It's truly their way of trying to control the housing shortage right now and make sure that there's enough homes for first-time home buyers. So
Okay.
making it more difficult for investment property and second home.
Okay.
Yeah, it's true, because a lot of what we were seeing over the last year is that these first-time home buyers are competing with an investor.
Right.
And I think it does level the playing field just a little bit and gives a little more opportunity, because when that investor purchases the home, that buyer that was looking at it, they're not going to have the same rate as the mortgage. They're going to be paying an inflated rate if they have to come back and rent that same house.
Well, I've talked about loan level pricing adjustments before. It's a fancy sentence for a charge for what type of financing you're doing.
Right.
2 years ago, if you were buying a second home, your loan level pricing adjustment was 0.75%. Today, it's 4 1/8.
Wow.
So they're just making it so that rate is so unattractive that not many people are looking at doing that second home financing.
Mm-hmm. Before we went to the break, I was starting to say when I was 19, I purchased my first home. And it was $42,000, which seemed like a lot of money back then. But it was that home purchase that built equity that allowed me to go into a nicer home, because I was a 3-bedroom, 1-bath home. It was in Oregon. And you take that equity and we were able to get into a better home. But then when an unexpected life event occurs, now we ended up using that equity to be able to start a business. And I think those are the kind of investments in yourself that do make a difference in your, in not just your lifetime, but generationally.
Family. Yeah.
Yeah, generationally
I
make
mean,
a difference.
I don't know, purchased 6 or 7 homes in my lifetime, and I've taken that equity and rolled it into another home, and I'm not 50 yet. I'm getting close, but the house we're in is the house I think we're going to die in, and we'll be done with it in about 5 years, just because we bought small and worked our way up and continue to take that equity and use it to buy the next home. And I kind of think that's the market we're going back into.
Mm-hmm. We wanted to ask a little bit about different types of financing. Actually, we have a listing that is in Corona de Tucson. I'll do a shameless plug here. It's at 710 East Blue Mesa Place. It's a 3-bedroom, 2-bath, 2,300 square feet, view fencing, open floor plan. But when I reached out to you to ask about financing, you told me it qualifies for USDA financing.
Correct. So USDA, yes, the people that certify our beef also do mortgage loans. I know.
How does that happen?
It started as a rural program for ranchers, right?
Mm-hmm.
And they had defined areas. You couldn't go into metropolitan cities and so on and so forth. But if you were in the outskirts of a city, you could still get USDA. And we have USDA zones just outside of the Tucson city limits, and Corona de Tucson being one of them. There's some areas out in Sarita, Green Valley, some places out past Tucson Mountain Park that have pockets that qualify for USDA. Why is that important? Well, USDA doesn't require any down payment. So you can get into a home with no down payment, and the rates are going to be equivalent to what you would get if you were doing an FHA transaction. So the rates are great. The qualifying process is very similar to an FHA loan. They do have some oddball things, like no swimming pool is one of them, I believe. But it is a very great program if you can't come up with a down payment. Now, the downside to it is you are going to be living, 16, 17 miles outside of the center of Tucson. But, there's trade-offs.
I was going to say, I just heard you say there's less traffic around your home. That's what I just heard. A more peaceful lifestyle, great views,
Absolutely.
Great mountain views. So, yeah, everything's about, benefits, right? So an older house, we get a bigger yard most of the time. You get smaller closets. It's all about choosing those types of things and what's most important to your family. But the zero down is huge for someone who doesn't have that nest egg to put a down payment in on the house.
Absolutely. And it's not, as you discovered, it's not hard to determine if an address fits for USDA or not. It's actually very quick and simple.
Mm-hmm. Do you want to give us those areas again?
We have, down where you're at with Corona de Tucson, there's some Vale areas, Green Valley, Rancho Sarita area, and then out past the Tucson Mountain Park on the west side.
Are there income qualifications for the buyer, or it's all about the property?
It's all about where the property is located.
Awesome.
That's a good thing to know. And what I was asking them, as you and Sandra, is there a stigma for USDA loans? You know, there used to be one for FHA. The guys weren't great buyers. Didn't have good credit. But for USDA loan, it's just the fact is that it's just in rural areas, and you may have the capability. You may be a strong buyer, but why not go with the program that's out there that can work for you?
No, I don't think there's any negative that comes along with it. And I get aggravated when I hear people say that, oh, FHA has a negative stigma to it, or VA or USDA. It's a financing tool. Mm-hmm. Truth be told, Fannie Mae, Freddie Mac, Ginnie Mae, FHA, VA, USDA, they are all purchased by the same people in the secondary market. The money to get those loans all come from the same place. And guess what, guys? They're all backed by the federal government. It's just a different program that helps that individual get into a home.
Okay, so let me do another shameless plug here. That is why we work with you, Jonathan, is because you match our clients to the right product for them based on the property that they're looking at and based on what their financial goals are.
Absolutely. We give options. We ask the right questions. We get to take the time to figure out who you are, what your goals are, what your family life is like, where you think you're going to be in 5 to 10 years. We help you put a budget together, and then we give you options that make sense so you can pick what works for you best.
And you also kind of help people that aren't quite ready to buy yet so that they have better options. Yeah,
no, we look at credit and say, hey, if you wait 90 days and do this, this, and this, your credit score is going to come up, and you're going to get more options available to you. You'll have a better credit score, better rates. We're constantly working with our book of clients, helping them improve their credit. Mm-hmm. For me, if you're looking to buy a house this year, let's start today. Even if you're not going to close until September, the more time we have to work on your credit, the more time we have to clean things up, the better your credit score is going to be, and the more products will be available for you.
And let's just say you don't always own those problems either. You know, we are the Johnson Smith team. Could you have a more generic last name than the two of us? And so sometimes it's just a name issue that you want to get cleared up, and you don't want to do that once you're under contract.
Absolutely.
How does somebody get hold of you, John?
They can get me on my cell phone at 520-247-3610, or they can always email me at john@inspiredlifemortgage.com.
And are you moving?
We are moving.
To
1951 North Wilmont, Building 1, second floor.
Hey, everyone, thank you guys for listening. We have John Spur on the show, who is the owner of Inspired Life Mortgage. Next, we have Rigo Arce from Pest Prevention. We had him coming up on the show. Thank you for being on the show, John. We really appreciate you having time with us today.
Thanks for having me. It's great.